All right, guys, welcome back. We're going to be going over how to hedge. Now that you guys know how to stack and scale in, we're going to go over how to hedge, all right? And we use obstacles for our advantage, all right? Obstacles is a POI in the way of the overall directional bias, right? It's a unmitigated QM, unmitigated block with liquidity above or below, right? Now, there are a few things that will be different from what we know so far. When we are looking to trade intraday, now by intraday, it can mean we trade on the 5 and 15 minute and catch a trade in the day. But if we want to trade intraday and try to catch as much trades as possible, some people call it intraday mastery, some people call it ping pong, whatever you want to call it. I'm gonna still call it intraday. All right. For us, in order to try to catch as many moves as possible, using the same logic that I taught you guys so far. Now, this is a advanced section, so this will be hard to grasp in the beginning, but using the same logic that I taught you guys so far is how we're going to try to catch as many moves as possible in the day, right? So you guys know how to scale in already, simple as that. And now we're going to learn how to catch a trade or hedge a trade, let's say, and then just also stack trades to finish off the entire day, right? Now, this is possible. There is no limit with this way of trading. Like I mentioned, it's limitless, but there are a few things that you will have to keep in mind to get the best precision possible. The first thing is this, right? So we know that we identify liquidity on the higher time frame. But because we are going to be entering trades in and out throughout the day, we need to identify equal lows and equal highs. That is going to be our main, let's say, our main target, right? We need to identify equal lows and equal highs. This is what's going to confirm that POI on the lower time frames, right? Because we're trading up and down, ping pong, right? Let's just call it that, right? So we're going to be using equal highs and equal lows to help us identify the overall, let's say, bias for that area. Okay, because the market moves in liquidity. So we need to see liquidity, obvious liquidity, to kind of know where, let's say, the market is going to head into during that time period. So let's get started. Oh, and another thing, the time frames that we're going to be using are going to be from the higher time frame, of course, but are going to be the intraday time frames. And then once we find out what's going on in the intraday time frames, our range, our POIs, and all that, we're going to be using only the 1 minute and below. All right. So I'm going to show you guys what I mean. So here in the 15-minute intraday time frame, we have around liquidity. We have a breakup structure, right? So we know that is our range high. We know that's our overall target because we are pro trend overall, right? And now we got to find our low. So our low is right here, liquidity, and we broke structure. So now we have our range. So now we know where we are at. We know that we need to take out internal, right? You'll come into this. This is a POI in a higher time frame, and then take out the external. So we know what's going to happen for that day already. That's the cycle, right? So now this is a start of London, starts around 2 o'clock. So the kill zone starts right there, right? And then the day most likely is around, this is right there, 12 o'clock, right? Now for me, it's at 12 o'clock, right? I don't want to trade anything after 12 o'clock. And then it's 1, 2, 3, 4, 5, and then etc. So let's put 12 o'clock, right? I don't trade anything after that. I don't recommend to trade anything after 12 o'clock, right? So that's what we see here. Okay, so once we see our range, we know where we're at. We identify our liquidity points here and here. That's very obvious. Now we drop down all the way down to the 1 minute. And it's time to work inside of this range. So let's identify our obvious equal lows. Equal lows right there. All right, and equal lows right there. We know that this is the end of the range. That's the high of the range. Okay, equal lows, equal lows. So I'm gonna just draw it across, draw it across. All right, so now manipulations are fast and quick, meaning they would just come in, dip below, and leave. Dip below, then just leave and make the retracement. They're fast and quick. So remember, we choose the closest POI to the liquidity. The same rules apply, right? The closest POI to the liquidity, the market is fractal, liquidity is fractal. We know that. So the closest POI to this equal lows is this imbalance fill price action. That's it. That's all I have, right? So price taps into there. Now, you guys remember that we scale in, right? How to scale in. So all these highs should be protected. They all should be protected because we're coming down and take out the internal liquidity of this range. So these highs should not be broken. So what do we target? We are going to target the internal range of this current range, this 1 minute range. Now, to be honest, I don't see any internal liquidity here, right? So I'm going to drop down to 30 seconds. This is the only internal high right there, 3 confirmation that I see we're probably come into. There's a breaker, there's a bigger time frame order block right there. You see the candles, same color, 5 minute OB. Same rules as the video on how to stack, right? So that would be our target. Now, price does not always make it there, right? Now, for what reason? There could be a lot of reasons because we're dealing with the 1 minute and seconds time frame, and yeah, there could be a lot of reasons. So, but that's the rules. All right, simple as that. We're not going to overcomplicate it. Simple as that. If I drop to the 15 seconds, right? Like we can see, you know, strong highs here, 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 here. So, you know, but for us, that's irrelevant at the moment. We want to target that 1 minute and obviously that seconds time frame liquidity. But that's what I see. That's my high, that's my low. So when price is in here, I'm expecting that to get taken. So let's say we're in. Stop loss is a 7-pip stop loss. So now you got to ask yourself, is this worth it? Is it worth the risk reward? It's literally 2%, right? So now, how do you think that we refine this POI? The same way that we refine any POI. That's the 1 minute, right? Let's drop down to the 30 seconds. I don't see anything clear, but if we drop down lower, that's liquidity. We agree on that. That's liquidity. Look at that, equal lows. You see that? Taken. So that means this is a breaker. If that's a breaker, so inside of a higher time frame PY, there's going to be a breaker. So inside of a higher time order block, it's going to be a breaker. So we can adjust this to this. And now we have something like this. Right? So this could take you out. Most likely it would. And that happens, it's okay. So you see what happens? Yeah, so it created QM. So it's, yeah, it's not going to go up again. So it created QM, so this is gonna drop and take this out. So this would have been a loss. Yeah, all right, cool. Now, again, now we are trading inside of Asia currently. Well, just outside of Asia a little bit. The Asia indicator is wrong. Asia ends for me at right there. So yeah, we're trading just outside of Asia. So that is Frankfurt. All right. So that would have been a loss. That's fine. So now we have these equal lows. What's the closest POI to liquidity? So what we have here is the liquidity equal lows, and we have this breaker because this took out this and price didn't respect. So it broke through it as a breaker, right? So I'm expecting price to come to here. Let's see, what's the distance? So 1.4. All right. So remember, a manipulation is quick and fast. So let's see what happens. That is my area. Now you may ask me, do you recommend that we put it just below the liquidity or right on the POI? So based on my experience, right? Based on my experience, I recommend that you put it just in between because sometimes price will go dip like just half a pip and go, and it won't even hit this, right? And that happens. That's just what the market does. There's nothing we can do about that. So make sure you add spread and just test this out for yourself and see what works best for you, right? At the end of the day, it's the same logic and the same understanding. So I recommend to put it just in the middle. So that way you either, you won't miss it. And also, so yeah, so you won't miss it. You'll be tagged in, right? Simple as that. So we have a high up here. I already see this. We have a strong high right there, strong high. It's what I currently see right now, actually. So let's see. And I see internal liquidity into this. Okay, let's see what happens. You have to watch and see how price being delivered. All right, so we're tagged in. Nice. Let's see if we even tag the POI. Yeah, we didn't. You see that? So we never tagged it, just missed it by 0.02 pips. And this happens, this is out of our control. Yeah, 0.0, yeah, 0.3. So don't be greedy. So where's our target? Internal liquidity. Internal liquidity, our target. And now remember, we are still shorting from up here. We're still shorting from up here, right? I know that this is our POI. Right, all this is POI. I think it was something like this. That's a POI. And we're still shorting from up here. So I have this long, right? So now I have the right to take the short because the 1 minute is still bearish. So we still anticipate a new leg to be made. So this is where you hedge. You're taking the short and the long. So I already see a rejection block right there. So let's see what happens. And then I'm gonna target the low of the range, like I mentioned on the scale in video. Let's see. All right. So this went for 7%. This one went for 6%. Okay. So that is the, yeah, the entry is, all right, cool. So now let's go back to her time frame real quick. See what's going on here. So we had liquidity. Hold on, I need to go back a bit. It's in the way. Delete this. So we have liquidity right there. Now we gotta look into the mitigation phase and all that. So price went up. Let's see. Price went up. Took out the slow. Mitigated that. That low was taken. Let's mitigate this. Take out liquidity here. All right, that came in to mitigate this. This was left unmitigated. Mitigate the open, but not the 50%. So that's mitigated. This is the next unmitigated area. Price. Let's see. Yeah. Yeah. Price created a 3 candle formation right here. 1, 2, 3. That is liquidity. That is close being fed into this unmitigated POI, unmitigated QM, the closest POI to liquidity, right? So now we're just going back to the regular rules from the higher time frame perspective. That's that. And that's the 1 hour unmitigated wick, I believe, around there. Yeah. So 2 to 4 hour. Yeah. So 1 hour unmitigated wick. Yep. Should lines up with this. Which is this candle right here. The one I just had. There we go. So that would be where we can take a direct entry. How many pips is this? It's a 5.2. All right. Now, can we go lower in this? Sure. There's no limits. That ends up with what? Another Quasimodo. See that lines up with this order block, and now we have this strong low right there. So we can just refine that. Right, but all of this is all inside the same key level. Let me go back to the 1 hour so you guys can see this. This is all inside the same key level. This is the key level right there. All of that's inside. Look at that. Inside this same key level. Like I said, look at that. Inside, right? You can do small adjustments. Nothing wrong with that because the market's not perfect. So there's that. For those that are going to ask me, well, shouldn't it be perfect? No, nothing is perfect, man. Just adjust it to what makes sense to you logically. Right there. So if I'm going to take a direct entry, then my long will be here. Stop loss will be just below that. How much is this? 3.3. Let's do a 4. I do not like numbers that are not even, right? Let's just round that up to 4. All right, let's see what happens. Okay, let's see. All right, play it out a little bit more. All right, so we're tagged in. This thing is fluid now. So we're tagged in right there. We never took out this low. Look at that. Respected it. Never took it out. So now we're in here. So now notice all of these strong highs now, like I mentioned, become weak. They all become liquidity now. Look at that perfect trend line. They all become liquidity now. So we're aiming for this high up here. All right. So now before we continue, how can we catch a confirmation entry trading this way? It's simple. All you have to do is go to the seconds time frame. And let's see if we see anything in here. Yes, we do. We see a break structure. I hope you guys are starting to see how fractal this is. It's a very deadly strategy. It's just phenomenal. And I know I keep saying this a lot, but it's like once you put in the work, guys, there's no limit. So, okay, there's obvious liquidity right here. Look at that. That's just obvious. So I want a long below that. There's an order block right here. All right, let's see what happens. Okay. Near miss. I believe I'll come back. Let's see. I'm not gonna change my idea. Okay. Yeah, I'm still not gonna change my idea, to be honest, because it's unmitigated. It missed it by pip. So price, book structure, pullback, retrace once again. Let me check the 1 minute. It's an unmitigated wick on the 5. It's an unmitigated wick on the 1. Interesting. It is 1:30. London opens at 2 o'clock. Let's see. See what happens. All right. So that's broke structure, liquidity. There's a breaker right here. I'm back testing this with you guys, so bear with me. There's liquidity right here. So I'm gonna take this short, and I'm gonna take this and to take this out. It just makes logical sense because remember, the 1 minute is still bearish, so still bearish. So until this becomes a failure swing, I have all right to take that short. So let's see. All right. Okay, trend on liquidity. You don't want to be part of the liquidity. So let's see. All right, nice. So we tapped in. All right. So that's a failure swing. That's trend on liquidity. Look at that. Trend on liquidity. This has to go. It just has to. It just makes logical sense. It's gonna definitely destroy this. Let's see. All right. Nice. We broke above. Okay, so we broke above. Let me remove this trend line. Broke above. So now we have a strong low. Let's see. Okay. Pace out a little bit more. All right. All right. Hold on. Give me a second. Broke structure. We have a strong low. Strong high. Second. Okay. This liquidity. There is a unmitigated POI right here. Close liquidity. There's no liquidity down here. That makes sense to me. No liquidity down here. That's the closest POI. So we're gonna get a reaction from here. And because we are now pro trend, because we just broke this high, a strong low should not be broken. So that's a strong low on the 15. That's a strong low. Yeah. So we have this mitigated this. That's mitigated. Strong low. Went up to liquidity. Strong low broke structure. That's the major structure. Price came back down to this strong low. Liquidity just above it. Equal lows. Check the 5-minute. 5-minute imbalance. Look at that. And 5-minute imbalance and a 5-minute rejection block. I have all the confirmations to go along there. Yep. So take this. Stop it. We'll just go below here. Aiming for this. Like this. Okay, we just broke structure. So this strong low should not get taken. Okay, it should hold. So if it's gonna hold, then we need some liquidity in order to take it to this mitigated block. Take out liquidity at strong low. So let me check the 30 seconds. Look at that. That one's perfect. Let's see. How's price being delivered? All right, created a 3-candle formation. Let's see. Yeah, I'm gonna take it here. 3-candle formation. That is where stops are at. Take them out and then fly. 1 minute, I rechecked that, didn't I? Yeah, that's inside of this 1 minute. 5 minutes is unmitigated. Wick. So let me just, hold on guys, let me just fix this for you. It's such a mess, I know, but put this here. Put this over here. All right, so range here, range to here. There's the liquidity right there. That's also equal lows. Okay, look, let's zoom in a little bit more. 5 seconds. Yeah, right there, equal lows. Lines up with this. It's a break, okay. I'm gonna take this one. All right, so let's break this. I'm gonna go break even already. All right, we broke. That looks like an inducement. Let's see. Let's see. Yeah, so I'm gonna short right when it goes below that. Right there. There's a rejection block. I'm a long right here. Now we're stacking trades. These were obstacles. We had equal lows, always equal lows. So that's what we want to see to take a counter trend. It just makes it high probable, right? It's just a logical sense because obstacles right? They're in the way of the overall move. So if they're gonna just take out stops, make retracement, we need, a reason. And this is the reason why they would do it. Because there's liquidity there. Double bottoms and whatnot. When we stack in trades, we just follow in the order flow. Yeah, 5 minute, 1 minute. All right. So many green lines, so dark. I mean, green reward tools. So it should fly. I'm just waiting for this to fly. I mean, it should. There's so much liquidity already here. It should just make a fast push at some point. It needs to make, oh, there we go. Ah, there it is. Wow. Yeah. It's just when I said it. All right. So 17, 13, 11, 10. That was a loss. That one was a 7. That one was, what was that? 6. And this was a 4. So a total of, yeah, well, a lot. We did a lot of risk reward. We did a lot of percentage. Phenomenal backtesting session. But this is how you ping pong. This is how you hedge. This is how I do it. And it just makes logical sense. As you can see, again, what I mentioned in the stacking video. Know how it's broken, man. Know how it's broken. Here, failure swing, that comes from the break, and we just stack. For hedging, we just counter trend. And for that, I would like to see equal lows. Now, that's my personal preference. Equal lows, it just makes it higher probable. If you backtest this, you're going to see that it will have equal lows when we're, taking a counter trend move. We're trying to catch an obstacle. They just react pretty well. Like this one, you see, just reacted pretty well, right? But like I mentioned also in the beginning of the course, the basics is, it's better if you learn to catch pro trend moves. They are more high probable and they give you way better setups than trying to catch a counter trend, as you can see here. But this is how you stack trades, which we went over, but we did here again. But this is how you ping pong. This is how you hedge. This is how you catch moves up and down within the day. And I believe this is still, yeah, this is still London. So we still have a long way to go. But that's the overall target of the 15-minute. And that's how it looks overall. So check the 4-hour looks like this. 1 hour looks like this. 15 looks like this. So it's possible. This is what's possible. And I'm saying that this is what's possible because it's going to take a lot of backtesting, a lot of practice to get to this level. Again, don't go straight into this. Right? I recommend you start off with the higher time frames first, and then slowly come down to lower time frames, slowly stack trades, slowly counter trend, and eventually everything will make sense. But there is no limit with the way that we trade. Everything that I taught you guys works. You just have to put it to practice. Now, disclaimer, I do not trade like this every single day. I used to trade like this when I first got started with this strategy, but now I take anywhere from 1 to 2 trades. I'm pretty sure I mentioned that already. I just need 1 or 2 trades a week and I'm good. I'm set. I don't trade actively, let's say, or aggressively as I used to anymore. But this is what's possible. Following the same rules: strong highs, weak lows, strong lows, liquidity, inducement. Same thing. The market is fractal. So I hope this proves my point that what I taught you guys so far works. That if you study and you put the time in, I promise you guys it will be worth it. It will take time, but it's worth it. And it works. You can backtest this over and over again and you will see results. So that'll be it for this. Any questions, you can let me know or let the community know. Other than that, guys, on to the next one.